Hello guys, welcome to my YouTube channel. So today I'm going to do a breakdown of gold, what I'm anticipating the next few weeks. So I'm going to start from the yearly time frame. So on the yearly time frame, you can clearly see that the market was bullish. The last year's candle also was bullish. We had this year's candle is a doji. On the 6 months time frame, you can see that the candle is a doji and also it's also bullish. On the 3 months time frame, you can see that the previous quarter closed above the open, meaning that bulls were in control of the market. On the 3 months time frame, you can see that we had this hidden liquidity. Price came back, rebalanced 50% of it, and we had a huge rejecting from that area. Okay, when you go to the weekly time frame, you can see that it was a single area. Let me use some brighter colors. When you go to the weekly time frame, you can see that it was a single area liquidity. Price came back, retraced, and rebalanced 50% of that area. When you go to the daily, we are supposed to come here and look for structures. When you come to the daily, you can see that we had a double area. We had this area, which was a free zone, and we had also this other area. You can see that price came, broke, and it never came back to this area. So this was a free zone. Okay, and this other area, you can see that price retraced back, did not enter even on this first area. Then it broke and price never returned back. So price had to come back, retrace 50% of that area to rebalance, because on the market we know that both buyers and sellers must be given equal opportunity in the market. So we can see that price came back, rebalanced 50% of the sellers who had left inefficiencies on this area, on this point of interest. We can see that price lacked sufficient liquidity to break the swing high, reacted from that supply, and we went to the area below. After reacting from the area below, we can see that price has been bullish, and when you come there, you can see that the nearest area that we had is this one on the daily time frame. That was the nearest structure that we're having on the daily. You can see that price came back to rebalance, but it never reached 50%. So this one became a liquidity, and you can see that price broke structure, but there were inefficiencies that were below on this level, right? So we have price. What did price do? The test back came, printed these swing points. They did not reach the 50%, and we can see that price came back to the 50% of that area, right? So let's go to the 4 hours time frame and see what we are going to see. So on the 4 hours time frame, you can see that price came back. This one was a single area liquidity. You can see that price came back, but it did not retest 50% of that structure. Okay, went up, lacked sufficient liquidity to go up, so it's coming to fetch sufficient liquidity for it to buy. So on the 4 hours time frame, these were the double areas that we are talking about, and we know if price reacts on the double area, if price reacts on this level, our target should be the external range liquidity. So I'm going to I'm going to look for buys. These are an opportunity for us to look for buys to come and take out this external range liquidity, and most probably also this high of the year is going to be taken out. So you might see gold going to print the highest highs. Yeah, the highest highs of the year. So when you come to the 4 hours time frame, which other structure can we see? We have this single area right here. We have this single area. Let me minimize some drawings. We have this single area right here. We can see that price broke that structure, but it did not reach 50%. So this swing point is liquidity. I'm expecting that low to be taken out. I'm expecting that low to be taken out. I'm expecting that low to be taken out, and then price buys from this area. So here we have two scenarios that are probably going to happen. The first scenario, we had price come to the single area on the daily, and you can see that the single area on the daily it also had a liquidity. Price came, reacted on the 50%. Now we are supposed to go to the 1 hour and see what is happening in here. So on the 1 hour time frame, after price purging on this last swing point, we can see that we had a sweep of liquidity, right? We had a sweep, and then we had a shift. We have a shift of market structure, full body closure, and you can see that price also came and closed also above that swing point, also this swing point, initiating that bulls are taking control of the market. And the structures that also I'm seeing here, we have this double area. We have this first area, okay, and we have this second area here. So these are so I'm supposed to wait for 3. We have 1, 2. I'm going to wait for the first liquidation. First bullish liquidation, and then I enter on the second one. So this one is going to be 3. So I'm going to wait for a shift. I'm going to wait for price maybe on M15. If I see a shift on M15, it's going to be a 3, and then I'm going to enter on the second liquidation. So because this one is going to be the first liquidation, I enter on the second liquidation and target the external range liquidity of this double area, first area, second area. So this is an area which I'm going to be very keen. I'm going to be very keen on these areas, and let's see what is going to happen. So this is intraday trading. If you are swinging your trades, you can look for an opportunity to trade gold and up to these highs. But I'm a day trader, so I'm going to be taking opportunity of gold during the New York session. During the New York session and Asian session every day. So yesterday we had a very nice trade. We had price come, rebalance the 50% of the daily, right? After rebalancing the 50% of on the daily time frame, on this M15 time frame, we had these liquidations, right? Let me use the M5. This M5 we had. Let me go straight to the 1 hour. So on the 1 hour time frame, we can see that price came, formed, printed our low and started buying. Okay, the last candle to go up, it was the last candle, the last volume candle to go down was this one. We can see that price came back and did a full body close, close above. After doing a full body close, it initiated that buyers are taking control of the market. And inside here, the structures that we are having, we had this area right here, we had this area. We can see that price did a break, did not manage to break with a full body candle, so that candle became a liquidity, and then it confirmed that we are bullish by closing above. The next candle, it came, retest back, but it never reached 50%, so it became a liquidity. So we expect that low to be taken out. So it was liquidity, price rebalanced 50%, and we took our entry from this structure. Actually, I used this 1 hour structure. So that was a 7-hour trade. Yeah, 613 pips. So it was activated during the New York session, as you can see. It was activated during the New York session. So during the New York AM, it was activated during the New York AM, and it was a very high probability trade. Actually, it hit TP with the 1 hour candle. You can see the 1 hour activated our entry, and it hit that TP. So that is why all the time I insist on trading during the New York kill zones, because that is where we are having volume. As you can see also here, during the New York AM is when we had volume. Before New York AM, we did not have any volume. Yeah, if you're intraday trading, using this session is something that we should not take advantage of. So I'm going to wait for this setup to play out during the New York AM. Yeah, and my work right now is to be patient, and to react according to my trading system, and to manage risks accordingly, and not to react impulsively. So if you're new to the channel, consider subscribing, liking the video, and sharing. Subscribe to the channel so that we can reach more subscribers, and then I'm going to be very motivated, to be doing this doing these videos often.